This is your LMAX Exchange technical update for Friday, October 27, 2017. Euro dollar. So the euro is now taken out the 100-day moving average and is threatening to break below that neckline of a major head and shoulders top. We would recommend waiting to see how the market closes and settles on the week for a clearer directional insight. While we could be in violation of this neckline, the confirmation is always a nice thing to have, and so it'll be interesting to see where the market settles on the week. A weekly close at this point below 116.60 will pave the way for the possibility of a deeper setback towards 112.30, which is a measured move extension off of this head and shoulders top. If, on the other hand, the market is unable to take out or close below the neckline at 116.60, it will suggest that the pressure is still on the top side, and we could see another big bounce in favor of a continuation of gains in 2017. So it's going to be important to take a look and see where things settle on Friday. Sterling dollar. Cable has been chopping around, nothing really going on here. The market is consolidating between key levels of resistance and support at 133.38 above and 130.27 below, respectively. And so the market will need to see a break on either end for a clearer directional insight. Dollar yen. Dollar yen is trading up towards the top of a range that has defined this market for the past several months, really for a lot of 2017, and so the market could just as easily stall out yet again up here in favor of a continuation of this range trade and rolling over back towards an eventual test of the range lows. Euro Swiss. Euro Swiss is broken up to a fresh 2017 high, and the continued upside here suggests that the market will be wanting to push up towards a major barrier at 120, which had been critical support going back to January of 2015. Any setbacks from here should be very well supported ahead of 1260, with only a break back below that level to compromise the constructive outlook. Aussie dollar. So Aussie continues to extend declines this week after breaking down below some previous support that was in place at 77.30 about. It confirmed a lower top at 78.97, 78.98, and now opens this measured move downside extension exposing the 75.50 area. Dollar CAD. So dollar CAD is rocketed to the top side, taking out the August peak that we had highlighted many days back at 127.80, with the door now open for a retest of the psychological barrier at 130 further up. Look for any setbacks here now to be very well supported ahead of 125. Kiwi dollar. So the New Zealand dollar is now within a stone's throw of that 2017 low from back in May at 68.18. Look for that level to be retested, although daily studies are starting to look a little bit stretched down here, and there is the possibility for some form of a short-term bounce. But any rallies now should be very well capped ahead of the 71 area. SPX 500. The S&P 500 has pulled back just a little bit from the recent record high, but nothing significant just yet, and we would need to see a daily close below 25.44 to suggest that the market is at a minimum taking some pressure off the top side. Until then, the pressure remains on the top side, and there's risk for a continuation of this incredible move that we've seen in the S&P 500 with the next target at 2600. Gold. So gold has seen some setbacks over the past several weeks, but the market at the same time should be very well supported into the 1250 area, as it has been so for so many times in so many months. Setbacks have been intense in recent months, but ultimately the market has been supported in favor of higher highs, most recently a 2017 high up around 1357. So look for a higher low somewhere in the 1250 area in favor of that next upside extension back above the 2017 high, exposing the 2016 peak at 1375 further up. Only back below 1200 would compromise this outlook.